Hello, traders. Gary Wagner here. Approximately 2 o'clock in Honolulu, 7 o'clock in New York. It is Tuesday, 9th day of October, 2021, and this is the Daily Report for gold and silver. The next 24 hours promises to be an exciting day with the CPI numbers coming out tomorrow at 8:30 Eastern Central Time. Gold has managed to score another gain now for the fourth consecutive day, although today and yesterday's gains were tepid or single-digit in comparison to Thursday and Friday's double-digit gain. Gold did close up $6, is currently fixed at $18.34, and just $3 shy of the high achieved on September 3rd when gold prices reached $1,837 an ounce. It must be noted, however, that on September 3rd, the closing price was $1,833, so based on a close, it has already taken that price out. Gold was aided by fractional dollar weakness, with the dollar giving up about 0.1% and is currently fixed at 93.95. Meanwhile, GLD, which we are long, is currently at 171.28, up about 0.5% on the day, or 83 cents per share. Lastly, silver did decline. It declined to the tune of about 18 cents or 0.74%, about 0.75%, and is currently fixed at $24.36. Our chart inserts are being recorded as of 6 o'clock Eastern Standard Time in New York. We can see that gold is off of the highs that came in towards the close of the morning session in New York when we saw gold reach $1,834 per ounce. The chart that we are looking at is the same chart that we have been using for the last 2 or 3 months, and we've talked about the fact that this is a key level, this top that occurred on September the 3rd at 1837. It is most interesting to note that during that time, what we witnessed was a high of 37, but a close of 34. However, the fact that we are trading just under that right now indicates a small round of profit taking, and my expectations is that it will be all about the numbers that are released when the government forecasts the CPI data, Consumer Price Index data, for last month or October. Currently, the forecast is calling for an increase of 0.6%, which is a 2% rise over last month, and that would take the year over year from 5.3 to 5.4. We do not yet have an indication of the PCE, but I would expect that that will rise, although a little bit less, because it is stripping out food and energy costs. And the primary factor right now is, in fact, food pricing and rent. Now, we do have an active market, and we can see that we have just kind of ticked up to about 1834.30, although this daily chart is not showing it yet. But we are right at the close that we saw yesterday. A breach above this particular price point, to me, signals the real potential of a breakout and a strong breakout to the upside, because on a technical basis, the real resistance, major resistance, doesn't come in till between 1900 and 1920, 1920 being the high of June 1st of this year. We have enlarged the chart so that it does include activity in trading overseas. While I realize that Australia is a very, very small and segmented market, it does represent the first opportunity that traders in Asia and London have to collectively express their trades during the trading day, because it is now Wednesday in that part of the world. We can see that we are currently at 1834, and depending on the activity of traders, we could see it breach 1837 before the CPI numbers come out. We're looking at a daily Henkinashi, or Japanese candlestick chart, of gold futures. You can see this represents trading in Australia, and because it is fixed as an open off of the midpoint of the prior candle, it is much larger than the small candle that we just saw in a candlestick chart. However, the reason for using this chart currently is not because of that, but rather because of the absence of lower wicks over the last 4 candles that have formed, the pivotal candle that we got on the 4th of this month, and the fact that we have no lower tails and really decent body sizes. That indicates that the trend itself, the bullish trend, is still strong with some steam left to it to move to higher ground. This next chart that we are looking at is a daily candlestick chart of the dollar index. Yesterday, we talked about the fact that we had a variation off a simple 3-day pattern called a 3-river evening star. We also mentioned that for that candle to have validity, you needed to have a confirming candle, which we did get today. In other words, today's red candle has a lower low, a lower high, and a lower close than the previous day. So I would look for the dollar to continue to the downside, with the first level of support coming in at approximately 93.43. Traders, we are looking at a weekly chart of the Spider Gold Trust, or GLD, which we did enter a long trade in. We do have one Fibonacci retracement starting from the lows of 2020, when the GLD was at 136, up to the highs that occurred in August, in unison with our record level of gold at 2,088. We can see that the current pricing puts us just under a resistance area that could occur at the 38.2% retracement level. However, that doesn't come in till about 172, and this peak right here will match the peak that we saw in June when gold hit 1920. My expectation is we could challenge 172 by the end of this quarter, and by the first quarter of 2022, challenge these recent highs that come in at around $178 per share. Traders, we're looking at a daily candlestick chart, very compressed to show the entire range of the Fibonacci retracement set that I have added to this so that I can talk about our forecast. Our number that we needed to see was 2427. We breached that the other day, which did trigger a buy signal for those that wanted to enter silver from the long side. Now, we did see the market trade off by about 0.75% in New York. It has gained back roughly 0.25% of that, or approximately 6 cents, currently fixed at $24.37.5. However, what I find most interesting is what our upside target is, because I believe that we've got 2 basic points of resistance. The first comes in based on this double top that occurs roughly at $25. However, above that is the 23.6% Fibonacci retracement, just shy of $26. This would be my target for the end of the fourth quarter 2021, and my target for the first quarter, the end of the first quarter for 2022, would be between $25.90 and $26 per ounce. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.